Welcome to the next podcast episode from SNGLR. In this episode, our co-founders Patrick and Klaus do exchange why a new venture capital fund with focus on European tech startups makes sense and briefly talk about the difference between angel investor and a venture capital fund. I'm Roberta, a digital version of a moderator, and I hope you enjoy this podcast episode.
Yeah, Klaus, here we are now, 2 years after we decided to establish a new venture capital fund with the first ideas that we had about 2 years ago. Certainly you also ask yourself, when this idea came up, you ask yourself, who needs another VC? So what made you enter this adventure with SNGLR to create another venture capital fund?
Okay. Yeah, I'm since long time. I mean, since I was young, I was always attracted by technology, and so I observed over the last couple of years always that a lot happens in the technology, and the VC industry is really on the focus on this technology and supporting this technology. I was always fascinated and enthusiastic about it to see this. And when I then be approached by some friends here to whether we should set up something special here for around with a VC fund, we looked a little bit deeper on it, and but it took me like maybe 3-4 days to decide. Yes, this is something I would like to join and be part of the story of SNGLR Group.
Yeah, I mean, it's interesting that when you complain about it, let's say when you're involved in that sector and you just realize that there is so many good ideas, so many talented people, so many great companies, or at least product ideas. On the other hand, there is so much money in Europe, especially in Switzerland, but still it is so difficult for all these young startup companies to actually find funding if they have to go beyond friends and family. So I'm very convinced that venture capital has a very important also economic job to do, so that these ideas and people can actually use all their creativity for the ideas which they want to do. And I know that you have done a lot of studies on venture capital in Europe, in the US, because we also had to decide where do we invest. And I think you find quite interesting results on that.
Right. I mean, first of all, about Europe, what I have seen over the last 4 or 5 years, that more and more big venture capital firms from the US came to Europe and looked around for potential partnerships and to finding the right investments in Europe. So that already was like a first sign for me that something seems to go on here in that area, in this industry. And then I looked, and there are a lot of studies from different providers available, but I think in general it looks like that the venture capital industry, the amounts invested is like 3 times from what we see in Europe, what we have in Europe over the last 10-15 years. So year by year it was always like 3 times more investments happening in the US. And in Europe, when I looked then on a couple of studies in Europe, I saw as well then a lot of them in Europe as well. There was like 50% of the venture capital was in the UK, so, and the rest spread over in the other countries in Europe. And at the same time, with my activity since 2010 as an angel investor in this angel investment early stage ecosystem in Switzerland, but as well in other connected with other accelerators and innovation hubs here in Europe. As you said, I saw so much great ideas, and a lot of these ideas they did not come through in reality, have not been possible to put in reality or to pursue these ideas because of it was just a crazy idea. It was just because of missing of funding and not finding the right investors for it. So that was one of the findings where I said, okay, it seems still a lot of room for venture capital industry here in Europe. That's for sure. I think that, and what we have seen over, and then it took us quite maybe 6 months or so to find then on which areas we would like to focus to support these young entrepreneurs and the startups here. But then we found I think the right setup and the right spot, and since then we are active here.
Yeah, I mean it is striking, right, when you see that there is so much talent and so much ideas around, and it is so difficult. And we, even now that we have started the investment process on our end, we come across fantastic companies where we see that they really have trouble closing their rounds, especially in Europe. I mean, as we now focus on Europe, that you can, it's hard to explain actually why that is. So even the best of the best, we have some of the really excellent startups in our portfolio now, which we're looking at or where we've already invested, and we were always surprised how they, even with sometimes great backup from great investors, but still cannot close a full round, or at least it takes them very long to do that.
Yeah, there are different phases for the startup. I mean, most of the startups still they get the first fundings from friends and families and fools, the famous 3 Fs, and as well then with grants and with accelerator programs. I mean, this is something, especially this accelerator organizations, which have been more and more established across Europe over the last 3, 4, 5 years. So there already they get for the early ideas they get I think already some good support now. But then when it comes to funding, then they might find angel investors then on the beginning. But then the jump from angel investor to VC, which is then a bigger fund, deeper pockets, more possibilities to accomplish the journey with this startup for a longer, till an exit event, for example, or any other liquidity event, and this is really the challenge, and to get this from the angel investment, a very personal relationship with a lot of enthusiasm in the ideas and in the founders, in the startup, in the technology sometimes as well. But then to this more professional venture capital firms, and on the other hand, the venture capital firms, they see so many startups in the deal flow, so many ideas. I mean, there is this I think the 1% rule, that around in 1% of the deals a venture capital firm sees, they invest. So it's then it's still quite frustrating for a startup to pitch. I mean, I've heard of startup, they pitch like 100, 200 times to VCs. Then finally, some of them made it, and then it was still a great success. So it was not the question about the wrong idea. It was really the question about finding the right investor with the right fit to go to the tipping point and really make them a great success story out of it.
Yeah, and I think that also then kind of puts a light on what the VC should be able to do. So the management of a VC fund must clearly be able to distinguish the really promising startups from the ones which probably have issues in going to the market, in finalizing the product, and so on. So you need a big amount of expertise, which for many VCs, of course, is not very easy to provide, and to make sure that they have it in their team, because it's I mean, some investments, they require really great expertise, almost on the level of an academic, to actually understand what is going on. And then you still have to be market savvy in a way that you realize, is this going to be, even if it's a great idea, is this going to be helpful in the market? Is it going to be accepted on the market? And what is happening in the market? And I think what we, because of that, have decided to do is that we are very strongly engaged in venture building. So we're kind of trying to bring what we know from the angel investor phase, where you have, let's say, an uncle or an aunt which is taking care of you, taking you by the hand, helping you not to make too many mistakes in the beginning. We are trying to do that with our deal leaders, who are, unlike in many funds probably, are really expert in that specific field, come mostly from an industrial or industry background or consulting background, strategy consulting also. So they really are in the in the market. They know what's going on, and it's actually almost like a free consultancy assistance which you get with it when we invest. And I think that's one of the key aspects which was always clear for us, that this is what we would want to do, because that is of course the downside of venture capital money normally, that it's just it's just spread a bit among 10, 15, 100 different companies, and you just hope something sticks and something is successful. Whereas the angel investor has a very specific product or a specific team he likes, and he dedicates a lot of time to them. And so there is also a limit which you came across personally after 10 years, where you said, okay, you know, angel investors have a certain limit of what they can do.
That's right, yeah. Right, I mean, that's the dilemma for an angel investor. I mean, there are a couple of constraints on these angel investment activities. First of all, to make the right selection of good startups, you need to have as well a very good deal flow. And if you imagine, I mean, a VC firm, for example, they might see around 1,000, 2,000 deals per year going through their deal flow. And then they select and decide on certain criteria and invite for pitch events. And if you do this as a single angel investor, this is a huge time consuming to travel around to the different events and pitch events, to the startup conferences, and to get access. Sure, there's a couple of databases. The internet is there. Yes, you can find as well stuff on the internet. And if you have created a certain reputation in a certain ecosystem, then as well deals coming to you. But it's always then the question whether you see everything or whether you see only a part of it, and whether these are really the best cases. So this uncertainty is there, and this is the one limitation for an angel investor if you're a single person. And the second one is then just from a financial logic, rational point of view, is we know from the data that you need to invest in at least 8 to 10 startups, early stage startups, that you have 1 or 2 winners which really make a good return. So and I mean, investing is you might do smaller tickets on the beginning, but then you need to have follow-on rounds, and maybe after the second round or third round of investment, you might see, okay, which one is really strong performing and which one you better drop and no longer investing, because it might be you might lose your money, because sometimes there are some difficulties which come across. Because it's just in the nature of early stage. I mean, sometimes this young enthusiastic founders, sometimes they're coming from the university, or here in Switzerland from the ETH or EPFL, with a great idea, with great research work done. But then still you need to develop a business model, you need to develop a sales team, you need a management, a governance, and everything. A lot of things around on the company, which each of these elements might lead to a fail in a certain stage and phase of this journey of a startup. And so this is like the second. So you need to build a portfolio, and then you to invest this money, you need really to have deep pockets that you can really afford to, as an angel investor, to invest in 8 to 10 with follow-on rounds, etc. You easily come up to maybe like a 3 million, 4 million budget for this. And then on the other hand, if you know that only maybe 10%, 5 to 10% of your personal wealth should be in that high risk asset class, then you see how wealthy you need to be to be active. I had the luck to become in contact and have been member for a long years, and I'm still member with it, on a private side with Go Beyond Investing, which is pooling of angel investors. And pooling means that there's one representative of this pool of investors, and the pool collects the money to get the minimum ticket in a startup. And with this functionality structure, I was able really to build up a portfolio. I did over the last 10, 12 years around 18 investments, some with this with this network of Go Beyond, with the platform of Go Beyond Investing. And then after a couple of years as well, I did it with some other people I know on a private basis, like a small investor club to this.
So that's kind of the business angels way of getting closer to a VC fund. And whereas we, as a VC fund, try to get closer to a business angel network in a sense that we have these experts who are involved. Yes.
That there are still, I mean, it's still that the angel investors, even if you then pool the money, you still have not that deep pockets and the capability to plan your and forecast and plan your portfolio really, because you never know in the next round who in this investor club has the liquidity and the money on the bank account to continue with the next round, or all of a sudden you might be alone and the 5 other buddies in this investor club disappear because they did spend the money on other stuff. So this is then still the risk, even if it looks like more as in a direction of a VC activity, VC fund, but it's by far it's not. It's still. So we, for example, we on this angel investment activities, what I always experience as a disadvantage, we could not fast decide if you have seen a good deal. There was always a long discussion with this 5, 10, 20 members of the investment club, whether we should do it or not, and so it. Only when the due diligence and everything was done, we could come up with a proposal for a term sheet. And in the opposite, or on the other side, as a VC fund, you have on your fund allocation strategy, you know how much investments with which ticket size you can decide on, and then you can make fast decisions and can secure better deals as well for this fund. This one I observed this, and I always thought this as a big disadvantage. On these angel activities, compared then with the VC logic, VC business model. Yeah.
So I have experienced, the whole dilemma, and say on the other side. So I've a few years ago I've started to be on the entrepreneurial side, creating companies. Of course, always looking for funding, mainly in sectors of green energy. Entertainment, and these are like main sectors, and so I maybe also AI and digitalization, and I've always been in that position where I had to go out and convince people that what we're actually doing is good. I've always been in charge of more the legal and investor relations side. So for me, it is interesting now, of course, to be involved in the process of the ones who know about the pain it is to be there, and therefore I find it very interesting to also switch the positions. I think.
But tell me a little bit about how does a successful lawyer comes up with the idea to jump on a building up a venture capital firm and.
I think so. I mean, for me, it is many things. So one is, of course, that it is also a decision about the people who are involved, right? So it's about with you and Daniel and Luca. So it's a great team of people. So it's fun to work in that team. What is also, I would never have been part of a VC fund where you just have, let's say, people aged 30, 35 taking these decisions. I like that in our team, everybody has had a career and now is in a position to actually have quite a good base for decision making, and there is a bit of, let's say, relaxedness to it in the way we interact. So that's one thing, and the other thing is that it has become clear that when you are in that position, you build a huge network of people who have funds and who are interested in that and who are open for that. Maybe you were just not with the right project at their table, talking to them, pitching the wrong deal, but they are interested. And I think that's the key, is to know people who are open for this asset class. And it's one of our biggest goal, of course, by creating that VC fund, is to let people know that this is a valid asset class, that it is an economically important asset class, and that the very satisfying thing is that you actually see results. You're not just purchasing shares in a stock exchange where it doesn't matter where you invested or someone else. Here it really is you who helped the team to create it, or at least try to create something. And I think that is to me as a let's say, daily business is much more interesting than to be, for example, involved in other asset classes where it's just about sustaining a certain flow of funds, but there's no actual creation of products. And I think what also was a key for me and for you, I think, was that we found the theme in which we wanted to invest, and it was very clear to us that we also, with the setup of our team, we wanted to be at the kind of edge of technology, and we wanted to find the most exponential technologies. And so maybe if you want to elaborate just briefly how we determined what exponential technologies are to us.
Right. Yeah, I mean, it's like the core of our belief is really that we see a lot of development in the near future with these exponential technologies. We define exponential technologies that they either they reduce the cost every year to a certain percentage, or they improve the quality of something. So, and right now we have in our search scope, we have AI is a perfect candidate for exponential technology development, blockchain as well, augmented reality, virtual reality, IoT, Internet of Things, for example, as well, data connection, all this, and to a certain extent as well robotics, but that's then robotics from the scale up potential has a certain hardware. Yes, so and this exponential technologies, we looked around in which industrial sectors or areas there might be a strong development with these technologies, and with all of these technologies we have, based on our entrepreneur and angel investment experience with already, and then we came to the sectors, the longevity, vitality, which is a very interesting sector, and a lot of this development in that sector are driven by these technologies, and as well on smart mobility, smart cities. So these both sectors, they have a very strong growth protection, and AI we see around 70% in our deal flow since last year when we started to scouting for potential investment targets. 70% of the startups have an AI functionality in one way or the other. So AI is almost everywhere, and then blockchain was not that represented last year, but this year we see as well a lot of blockchain coming, and the other IoT and other technologies as well. So we see that our investment thesis from the expertise in the common similar exponential technologies applied to these both strong growing and very interesting sectors which have a major impact for the society and for our lives, human lives in the future.
Yes, and these sectors are longevity and smart mobility, smart cities. Yeah. So on the one hand, and I think when we talk about longevity, I think one of the important aspects for us is that it's not only healthcare, it's not only biotech, it's also some are even close to consumer technologies, which just improve your life in general. And the same approach, I think, also applies when we talk about smart mobility, smart cities. There is components of smart energy supply, as you mentioned, a lot of it in combination with AI components, and of course with smart mobility that is obvious. And as we just had in our latest AI briefing of Singular, we established that these are actually also the most important two areas for AI applications, longevity and smart mobility, smart cities. So, and I think we can summarize like after let's say close to, what is it now, 9 months of following a deal flow, checking a deal flow, going into due diligence on all these subjects and the investments which we've identified. I think we can safely say that this was a fine decision. This was a good decision to actually insist that Europe should also have an exponential technology sector, and that should not only be the US or Asia, especially with the expertise we have in this all of these great universities in Europe. So I think you're also happy that 2 years ago you decided that you want to undertake
absolutely.
This journey.
It was the right decision, definitely.
Okay. Thank you.
A lot of fun and excitement.
Yes. So let's see what's ahead. Thank you.
Thank you.